Hey everyone, welcome back to the channel where we break down stocks like we're chatting over coffee about real money moves. Today we're diving deep into PURR, Hyperliquid Strategies, a crypto-focused holding and active management firm that's been making waves in the financial services sector. Let's kick things off with a quick overview of where this company stands right now. Trading around $9 with a market cap just over $1.2 billion, PURR has delivered explosive returns for shareholders over the past year, up more than 120%, though it's cooled off a bit in the most recent week. Hyperliquid Strategies operates as both a holding company and an active manager specializing in crypto assets, with a laser focus on the Hyperliquid ecosystem and its HYPE token. Founded in July 2025, and headquartered in New York, the firm manages treasury operations tied directly to this blockchain network. CEO David Ira Shamus leads the charge in what remains a relatively young player in the capital markets space. On the revenue side, the business model leans heavily on appreciation in the HYPE token itself, along with staking revenue streams. That crypto-centric approach has helped drive profitability in recent quarters, though it also ties performance tightly to digital asset volatility rather than traditional diversified income. Shifting to earnings, the company posted a profitable fiscal third quarter, fueled primarily by those token gains and staking income. Key metrics tell a mixed story, though, with a negative net profit margin around negative 49% over the trailing 12 months, and return on equity sitting at negative 23%. Reflecting the early-stage nature of operations and heavy exposure to crypto swings. Looking at the balance sheet and cash flows, total assets and liquidity metrics show a current ratio above 18, indicating solid short-term coverage, while enterprise value hovers near $1.1 billion. Free cash flow yield remains slightly negative, and there's no dividend payout, which fits a growth-oriented crypto play still building its foundation. From a valuation standpoint, the price-to-sales ratio clocks in over 400, which screams premium pricing relative to current revenue generation. Forward PE estimates aren't flashing clear signals yet, given the company's age, but the model suggests the stock is trading in a zone that leaves room for interpretation, depending on how aggressively you assume HYPE token growth continues. Now for the SWOT breakdown. Strengths include strong one-year performance and direct ties to a promising blockchain ecosystem. Weaknesses center on negative profitability metrics and heavy reliance on a single token's appreciation. Opportunities lie in expanding staking revenue and broader crypto adoption, while threats include regulatory shifts in digital assets and overall market volatility that could hammer token values quickly. Recent performance charts show impressive momentum, with 61% gains over 3 months and nearly 150% over 6 months, outpacing much of the capital markets industry. That said, the stock isn't immune to pullbacks, as we've seen in the latest week. When we run an intrinsic value lens here, discounted cash flow approaches carry some limitations for asset managers like this, but ballpark estimates using available growth assumptions land the fair value somewhere in the mid-single digits to low teens range, depending on token performance scenarios. Under base case modeling, the shares appear to trade roughly in line with or slightly above our rough fair value zone, though assumption tweaks around HYPE appreciation could swing that target by 20 or 30% either way. Wrapping this up, PURR offers high upside crypto exposure through a focused strategy, but it comes with real volatility and profitability questions that make it a speculative name best suited for risk-tolerant portfolios. As always, do your own homework and consider how much crypto beta you want in your holdings. Hit subscribe for more deep dives, and I'll catch you in the next one.